Hello and how you doing, traders? I hope you're doing great. So in this video, I'm just going to do a little bit of market breakdown just to show you how the market played out and also the thought process behind every trade that we took. But before that, there is something I want you to know. Trading is all about having a systematic approach and a plan to every setup that you take. And one may ask, why do you need a systematic approach to the market? And the answer is simply because it gives you a reason and a confirmation to execute a trade whenever you see one. Having rules around your strategy enables you to have patience to wait for your setup to be in alignment with your confirmation that is needed. I have rules around every trade that I take, so I'm going to show you how I apply them this week on some trades that I took. So without wasting my time, let's jump right into it. So this week we had a lot of opportunities in the market and my community and I were able to capitalize from majority of it. So we took a trade on Euro USD, we also had a trade on GBP AUD, US oil and also GBP AUD. Right, but these are the two that stood out for me, and this is what I just want to show you guys in this video. Right, so let's just look at this. Looking at this pattern, we had this 1, 2 and 3. Right, so for those of you who don't know what this pattern is, I'm just going to break it down very soon, but look at this as well. We had 1, 2 and 3. Right, so if I bring it side by side, you can tell that they look the same, just that this is the opposite of this one. Right, so it's just like it's flipped, right, as you can see. So what is this pattern and what are the rules around this pattern whenever you see them? Right, what are the rules that you need to apply if you want to take these kind of setups around this pattern? This is a head and shoulder pattern, and for those of you who don't know what is a head and shoulder pattern is a pattern when seen on an uptrend represents or indicates that price is likely to reverse to the downside. Right, so when we have a market that is trending to the upside like that, right, this is a higher high, higher low, we have a higher high, higher low like that. So this is an uptrend. When we see a trend going up and we identify a head and shoulder at the top, this indicates that the market has a possibility of reversing to the downside. Right, so this is just a reversal pattern. Also, when seen on the downside, it could also indicate a reversal to the upside. So these are reversal patterns, and when seen on a trend, indicates that the trend is likely to shift. So why is this called a head and shoulder? When we say head and shoulder, we are not talking about a shampoo, but actually a human head and a shoulder. Right, so as you can see, this is the head of a human, this is the left shoulder, this is the right shoulder. So if I should draw something like that, this is the left shoulder, this is the head, and this is the right shoulder. Right, so bringing it here, you can clearly see this is the pattern that we have right here in the market. This is the left shoulder, this is the head, this is the right shoulder. That is why we call this the head and shoulder. Right, so there are some components of this pattern. We have the left shoulder, head, right shoulder. We also have the neckline. Right, the neckline is just the human neckline. So these are the components of the head and shoulder. Now, the head and shoulder can act as a reversal pattern and also a continuation pattern. Right, so what do I mean by that? I'm gonna just break it down. So this is an uptrend. Once we see a head and shoulder at the top, we could have a reversal of this overall trend to the downside. So this is what I mean by a reversal pattern. Right, and also what do I mean by it could act as a continuation pattern? Now, this is an uptrend. And as you know, whenever we are going up, we have a higher high. This is a pullback phase. This is the run. Price will pull back, push to the upside, a pullback like that. Right, so with this, we have price just going to the upside. So for this to continue to the upside, we'll have a possible pullback and also a continuation. Right, so if this price is pulling back right here like that, this is a pullback phase, we could have a left shoulder, head, and also a right shoulder, and then a continuation to the upside. So as you can see, spotting this head and shoulder right here in the pullback phase could actually indicate that price is going to reverse and continue the overall trend. Right, so this head and shoulder right here served as a continuation pattern, even though it acted as a reversal for this internal trend, but overall it indicated that this trend will continue going to the upside. So that is what I mean by the head and shoulder could act as a reversal pattern to change the overall direction, or a continuation pattern to also continue the overall trend to the upside or to the downside. So now, where do we have to identify this head and shoulder pattern. What you need to understand is this head and shoulder pattern is very valid once we spot them in an area of value. It's just like buying a house. If you want to buy a house, you want to buy a house that is located in an area of value. You don't want to live in the bush where there is no water, there is no road, there is no hospital, there is no school, right? So you want to be around where people are, or where you will get access to social amenities, right? So it's the same thing when you want to spot head and shoulder pattern. You want to spot it in an area of value. So what do I mean by an area of value? An area of value could be a resistance level, support level, or even a trend line, right? So we could have a trend line that could act as an area of value, which means this trend line or this area is acting as a sensitive area. Whenever we hit this trend line, price drops. We hit this trend line, price drops. We hit that trend line, price drops, right? So it becomes an area of value where we have to be aware of what the price will do when we get there. So whenever we have a trend going up and we want to identify a head and shoulder pattern, we always want to look to our left just to see if that area is an area of value, which means if that area acted as a resistance level in the past. And if it did, once we spot a head and shoulder in that area, this could indicate that price is likely to reverse since that area was a resistance in the past. So the opposite is true. When price is dropping, right, and you want to spot a head and shoulder, you want to make sure that this is in an area of value. That is by looking to your left. So you want to scroll back to the past data in your left just to see if that area acted as a support, or if that area actually pushed the market to the upside when we got there in the past. And if it did, once we spot this head and shoulder pattern in that same area, there could be a possibility of price reversing to the upside. What are the rules around how I spot head and shoulder pattern? First of all, we should be in a trend. As you see, a high high, high low, high high structures, right? And secondly, we should be in an area of value, which means there is a level that I'm watching and I just want to see how price will react once we get there. So this becomes my area of value, right? So now we have a higher high, higher low, and a new higher high in that area of value. So before I spot a head and shoulder pattern, I want price to pull back to the previous low right here. This is what I want price to do, because you know that when price is making high highs and higher lows, we have different types of pullback, right? Sometimes price will make a high, a low, will make a new high, and this pullback could come here and then price will just continue, right? This is another type of pullback. Sometimes price will also pull back to this level, right? It could just come here and then continue, or we could even have a pullback somewhere here before price will continue. So with the head and shoulder, I want this third type of pullback. I want price to pull back to the previous low, that is this low. So once we get this is not a head and shoulder yet, but this will give me a reason to start looking for head and shoulder pattern, right? So now after having this, I want price to close exactly at the low, right? I don't want price to break this low. Once we break this low, I'm not going to consider this as a head and shoulder. So I want price to close just at this level. And also what I want to identify is I want price to pull back, right, to give me the right shoulder, because now you can see we have the left shoulder, we have a possible head, right? So I want to see a possible right shoulder before I can confirm that indeed this is a head and shoulder pattern, right? So this is what I'll be waiting for. I'll be waiting for price to push to the upside to create that right shoulder before coming down. So when price is pushing to the upside, I personally have this box right here, and this is a trade that I took this week, and I even shared it in my Telegram group. I had this exact box here, right? So this box, I'm just drawing it from the beginning of the left shoulder to the head, right? So this is like a zone. But what I want from price is I want price to pull back to this zone, right, and then reject and push to the downside. So I just want price to play around in this zone, right? What I don't want is I don't want price to close above this head, right? So what do I mean by close above? I don't want the candlestick to close above here, right? It could be a wick, right? Price could just wick above. We could just have like a wick breaking this zone right here. This is okay. This is not a close. This is just a wick, right? But once we have the body closing above this, then this disqualifies my head and shoulder approach that I'm looking for, right? So this is what I'm looking at. I just want price to play around here. So if I should see a bearish engulfing candlestick in this zone, right, I should see a bearish engulfing in this zone, I can go ahead to be looking for selling opportunities, right, once I see this engulfing. But also we have two types of entries. We have the risk entry, we also have the reduced risk entry. Once I get in here, this becomes a risk entry because with my head and shoulder, what I want to do is I want price to create a left shoulder head, right shoulder like that, right, and I want price to break the neckline. Once price breaks the neckline, this confirms the head and shoulder pattern, right, and this also indicates that price has reversed, because if you understand market structure, once we break below this low, this is a change of character. This means that price has changed from creating higher highs and higher lows. Now we have a lower low, which is not a character on a downtrend, so this indicates that price is about to reverse, right? So once we do this, this becomes a reduced risk entry, which means if I get in here, there's a high possibility of price just pushing to the downside because the structure has changed. But if I'm getting in here, right, if I'm getting in here, which I have right here, if I'm getting in here, this becomes a high risk entry because the structure is still in play. Price could just push to the downside and continue going to the upside like that, and this is still an uptrend, right? So this becomes a risk entry. But this is one type of entry that if you get in here as well, you could have a very tight stop loss and also target the low, right? So imagine you getting in here with a risk entry with your stop loss right here and targeting here, and then the next person is also waiting for the price to just break this level, right? So the next person, what he's gonna do is he's gonna enter here with a stop loss just like that, and also targeting the same lows, right? So if you look at the first entry and if you look at the second entry, the first entry is taking 3.6% home, right, whilst the second entry is taking almost like 1:1, right? So the risk entry gives you a better entry, but at the same time it's risky because you are getting in even before. Just looking at this, once we get the engulfing candlestick or we get any bearish engulfing in this zone, we can take it and also target the low. This becomes the risk entry. So this is the first entry. The second entry, as I explained, is just by waiting for this to break. So once we break this, this becomes a confirmed head and shoulder for me because price has changed, and actually we didn't close above this head. Price rejected in this zone or just here, and we have broken the neckline. So once I see this, this gives me a reason to be looking for selling opportunities. So these are the rules that I apply whenever I see price heading towards a zone, whenever I see a high, break of this high creating a new high, and then a pullback to the previous low, right? This is what I apply whenever I see these kind of setups in that zone. So what I'm gonna do is I'm just gonna show you an example of what I'm talking about. So looking at this GBP AUD example, we have a high here, we have a low, price has broken this high to create a new high, and then price, pulled back, right? So this is still an uptrend and we are looking for buying opportunities. So now let me just forward this and let's see how this is gonna play out. So we have price just pushing to the upside, right? Now we need to identify where is this price likely to reverse, because whenever you are trading, you know that the market is not just going to go up forever. You will reach a level where price will just find resistance and then pull to the downside, right? So looking to our left, we can see that we have this zone right here which acted as a resistance in the past, right? So as price is here, I'm just looking for two things. It's either price is just going to break this level, we look for buying opportunities at this level, or price is just going to reverse and go to the downside. But before price reverses at this level, there should be something that I should see, right? It's either going to be a double top pattern, or it's going to be a head and shoulder pattern right here, or it's going to be anything. I need a confirmation that is going to tell me that price is going to reject to the downside, right? So now I'm going to apply my rules. Here I have a high, I have a low, and I have a new high, right? Which means price has broken the previous high. This is what I want. So for a head and shoulder, as I said, I want this pullback to come to the previous low like that, right? This is my previous low and this is what I want. So to establish a head and shoulder pattern, this is what I want to see. So I'm just gonna wait for price to do whatever it's gonna do, and as you can see, price just came to that zone, right? So I have my rule being established. I have my left shoulder, I have my head, and I need a possible right shoulder, right? So before I get this right shoulder, I'm just gonna draw my box here from the beginning of the left shoulder to the head. So this becomes my zone, right? So as price is just pulling back, I want to see rejections in this zone for price to push to the downside. This is what I just want to see, and this is what I'm interested in. So let's see how price is also going to play out in this zone. So as you can see, price has rejected. So if I want to take a risk entry, it could be here with my stop loss here and my take profit probably here, and I'll show you how to target take profit on the head and shoulder. But this will be my trade. This is a risk entry simply because price has not broken the previous low, and price could just come here and then continue to the downside, you know. But for a reduced risk entry, we're just gonna wait and see how this is gonna play out. So let's see. So as you can see, let me just cut it right here. We had price just breaking below the neckline, right? So this confirms a head and shoulder pattern. So if we should get in here with our stop loss just right here, our take profit, we're gonna measure the distance from the head to the neckline, and then this is what we're gonna do. We're gonna bring it here, and this is gonna be our take profit level, right? So as you can see, we are gonna take a reduced risk entry because we've waited for price to break below the neckline, and this will be our trade simply because we apply these rules by looking to our left to spot an area of value, identify this zone, and also taking it, right? This is the systematic approach that I use whenever I'm trading head and shoulder pattern. So with this head and shoulder pattern, we can see that it reversed the whole trend. This was an uptrend that was going up. We had a head and shoulder, and then we've had a reversal, right? This is what can happen on the reduced risk entry when it comes to the head and shoulder pattern, right? Let's say we have price just breaking this neckline, right? Two things can happen. It's either price will just continue going to the downside, or we could have a retest to the neckline and then a drop, right? So maybe one may ask me, when do I sell? Do I sell once we break the neckline, or I should wait for the retest? Well, that depends solely on you. If you like to trade breakouts, then you can just enter right here, or if you like to wait for the pullback, you can also get in here. But this actually depends on the time frame that you are looking at, or the time frame that you are spotting this head and shoulder. If you see this head and shoulder on a daily time frame, and then you enter right at the breakout here, which means your stop loss is going to be here. And on the daily time frame, if you're entering here with your stop loss here, then you can see that you're going to have like 800 pips stop loss, you know, close to like this 850. So your stop loss is going to be like 850 pips away from your entry, which is huge, right? But if you should wait on the daily time frame, or you go down the lower time frame and spot a pullback somewhere here, and then you get in, probably your stop loss is just going to be at the previous structure. So instead of putting stop loss here, stop loss is going to be somewhere here, right? So it depends on the time frame that you are looking at. If I see this kind of head and shoulder on a 15 minutes time frame, I can get in here, put stop loss here, because on a 15 minutes time frame, the pips is not going to be that wide, you know, as compared to a daily time frames. So it depends on the time frame that you are spotting this head and shoulder on. So with this example, I'm just going to focus on this level, and if I should put my trend line, you will see that the market reversed here to the downside. But if you look to the left, there was no solid, you know, resistance. The resistance that we had was somewhere here, right at this zone. Let me just draw a zone. This was a 9 zone, you know, that we could just, you know, expect price to hit and then drop because it was a resistance at that level. As you can see, price broke above that level and then also rejected. This is an advanced, you know, structure that I teach with my academy, and this is not something I can just break it down on YouTube like that, you know, unless you are part of the academy. But this is what we're looking at here. What beginners are gonna do is they're gonna think, oh, we just broke above this resistance, so price is just gonna retest and then we'll push to the upside. But what we were looking at was, you know, we knew that this was just gonna come back in, so this was just gonna put people at the wrong side of the market. People will just be looking for buys here. This is the break and retest strategy, like the beginners strategy that people use, right? But right here, just understanding the structure that approach this level, and even how we approach there with these kind of touches, we just knew the price was just gonna drop to this level, right? But this is not what I'm talking about, so I'm not really gonna go into detail, you know. So let's just focus on the head and shoulder pattern that played out on this uptrend. So I'm just gonna circle this. This was an uptrend, and I'm gonna go on the lower time frame so that we will see how price reversed, right? So looking at this was a solid uptrend. We're just creating high highs and higher lows. But when we approach here, let's look at the structure over there on the 1H time frame. mind you, when it comes to head and shoulder pattern, it's valid on all time frames. You can see head and shoulder pattern on the 15 minutes, on the 1H, on the 4H, on the daily. They are all head and shoulders, right? So there is no specific time frame that you can spot head and shoulder. So this is the 1H. Looking at this, price was just creating high highs and high lows, but let's see how price, reversed. We had this left shoulder right here, right? Price created a left shoulder, came down to create a low right here, right? And then broke this highs, created a head, right? I didn't know if this was gonna just pull back and continue. I didn't know, but what I was just expecting was we had this zone right here. So this is our neckline, right? So we had the left shoulder head, price pulled back to the previous lows. This is where we were like, okay, fine, now let's look at the right shoulder. If we're gonna get the right shoulder, so we're gonna have our zone right here from the left shoulder to the head. This is gonna be our zone. So what we want is we want price to pull back into the zone, tap into the zone, give us a reason to get into the market. That is if you want to get in with a risk entry. But here personally, I don't go in with the risk entry. But if you want to get with a risk entry, then we'll be looking at any bearish engulfing candlestick that we will find at this zone or even within the zone, right? So if you look at this, the risk entry could have been this bearish engulfing. You just get in here, but this is still not valid. This is still not confirmed head and shoulder because the neckline is not broken. So a very valid entry would have been just waiting for this to break. This would have been your entry, stop loss just above the right shoulder, and then take profit. You just measure this head to the neckline, then we just bring it here. Or we can also break and retest, and as you can see, this is the retest, right, of the neckline. But actually we broke above the neckline. This is also something that I teach in my academy, where we have different types of pullback. So here it's still valid for us to be catching these trades to the downside as long as these highs are not broken, right? But as you can see, we had this nice head and shoulder pattern and price reversed to the downside, still using the same systematic approach that I just showed you. Another thing that we also need to understand, when it comes to head and shoulder pattern, it's not always going to be picture perfect like that, right? It's not always when we're gonna see price coming exactly to this level to give us a very nice head and shoulder like that. If you look at this, we have a very neat left shoulder, head, right shoulder, a very nice neckline, right? It's not always gonna be like that. Sometimes you could have this left shoulder right here, you could have this head, but the right shoulder, right, will not even come to the previous low, right? So we could just hang somewhere here, and then the right shoulder will just be like that, right? So if I should draw the neckline, you'll see that it will be slanted, right? This will be the neckline. Instead of the usual straight neckline of the head and shoulder, we could have something like that. This is also a very, very, very valid head and shoulder pattern in the market. So with this type of head and shoulder, is the same rule that I apply. I still don't want the right shoulder to close above the zone, and what I'm looking at is a confirmation or a break of this, right? So even if price doesn't come here to create the same lows and does something like that, I still consider it as a possible head and shoulder pattern. All I'm waiting for is price to break this neckline, right? So once we have a break of the neckline, could just enter right here, put stop loss here, and then see the market going to the downside. So now let's talk about the head and shoulder that we can spot in the pullback phases. So if you have an uptrend, high high, high low, new high, price pulling back, we can find like these kind of head and shoulders in the pullback phases. This is the pullback. So if we spot something like this, left shoulder head, right shoulder like that, then we can just start looking for buying opportunities just to continue the overall trend, right? So looking at this structure right here, let me just cut this. It's a high low, high low, high. And looking to our left, we are not in an area of value, which means we are not really expecting a head and shoulder pattern for a reversal, right? Though we don't know what the market can do, because we can never predict the future of the market. But just by looking at our structures, we know that this is a major resistance level, which means if price should push to the upside, this is where we can actually expect maybe head and shoulder pattern to reverse to the downside. But as it stands, it's still an uptrend. So what we are just focused on is buying opportunities. So let's see the structure that will play out here. I'm just gonna take this out. This is a high low, high. This was our previous low, right? So if this is gonna continue to the upside, what we don't want is, we don't want price to break the previous, because if price breaks the previous low, then this is a change of character where price can just, you know, reverse to the downside. So what we are expecting is price to, you know, stay above this level, and this is simple market structure in case you didn't know, right? So this is what we're gonna have. So let's just forward it and see what price is gonna do. Price is just pulling back. This is the pullback phase, right? This is the impulse, this is the pullback, this is the impulse. Price is just pulling back. So what we are waiting for is the end of the pullback phase. We want this downtrend, this internal downtrend, to finish so that we can just start looking for buying opportunities. It's just like that, right? So we have a high, 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 low, high, 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 low. This is the internal structure. What we are waiting for is for this structure to finish so that this trend can continue. And this is the level that we are not expecting price to break. If this pullback should break this, then this is a downtrend, right? This is a change of character. But as long as we are above this level, we are expecting this internal downtrend to shift from bearish to bullish so that we can start looking for buying opportunities. So as it stands, we are still in the pullback phase, so we're just gonna wait. So as you can see, we have a lower low, lower high, and we have our new lower low, right? So we're just gonna see what price is gonna do. Price just rejected at that level, right? This is our structural level. So we have price just pushing to the upside, and as you can see, price also rejected at this level, right? And if you understand market structure, this is a downtrend. This is an internal downtrend. We have a lower low, lower high, lower low, lower high, lower low. This structure is going to shift bullish once we break above the previous high, like that, right? But as you can see, price never broke above that previous high. Price just came to tap exactly at that high, and this is what I'm looking at. So once I see this, this can, you know, be a possible head and shoulder formation for me. So once I see such a thing, I'm just drawing, you know, my left shoulder to the head, and I just want to see a rejection in this zone, right? This is the same approach that I used on the uptrend. If I should flip it, you can see this is the same, right? Looking for a head and shoulder pattern. This is the head, this is the left shoulder, this is the head, and what we want is we want price to reject in this zone or even in this zone, and then we can wait for the break of this, then we will look for selling opportunities. This is for this head and shoulder, right? So if I should flip it, it's the same thing that we are looking at. I don't want you to get confused. This is the same thing that we are looking at, the same application. So let's see what's going to happen. We have price just tapping in this zone. So as you can see, we had this engulfing candle, and this is what I was talking about. Once we get this engulfing candle for risk entry, you can get in with a buy, put stop loss maybe below the head, and then target the next high, right? But this is still a downtrend, internal downtrend, because this previous high has not been broken, right? So this becomes a risk entry. So what we can do is we can also wait another engulfing candlestick right here, right? So this is giving us strong reasons, you know, to get in, but to be safe, we can just wait for the break. So as you can see, this is the break, and this is a confirmed head and shoulder. This is the left shoulder, this is the head, this is the right shoulder. We have the break of the neckline, right? So this becomes a very valid head and shoulder pattern that we have in the market, right? So as you can see, this is going to be our target by measuring this head to the neckline, right? And then bringing it here, exactly somewhere here. So this is where we're going to take a profit, you know. So this is the same approach. So as you can see, this head and shoulder, they didn't change the overall direction of the market. Overall direction is to the upside, but we just spotted an internal pullback. This head and shoulder just continue the trend, right? So this is what I mean by the head and shoulder could also serve as a continuation pattern in the market to continue the overall trend. So now let's come back to the trades that I took this week and the same rules that I applied to take these trades, right? So this is Euro USD, and as you can see, this is a nice downtrend, right? If you understand market structure on the 4H time frame, you will see that this is a lower low. We have a lower high, it's a lower low, lower high, lower low, lower high, lower low, lower high. Price created a new lower low. So this is our most recent lower high. So until this high is broken, the 4H is still bearish, right? So this becomes my previous high, right? So I'm gonna have something like that until this level is broken. This is still a downtrend. So let's look at where the market, you know, started for the week. So I'm just gonna pull up this is exactly where the market opened for the week, right? So on the 4H, I'm just looking for selling opportunities, because as you know, if you're on a downtrend, what you want to be looking for is selling opportunities. If you're on an uptrend, what you want to be looking for is buying opportunities, right? So looking at this, I knew that this was just a pullback phase, right? This is a pullback that happened, and until then, until the break of this high, we are still looking for selling opportunities. So this becomes my area of value. So let me now go down on the lower time frame. So right here at the area of value, let me just delete everything so that I don't confuse you. Now at the area of value, I just want to see how price will react when we get there. And as you can see, we had price creating higher high, higher low, created a new higher high, a higher low, and then price broke above this high to give us a new high, right? So at this new high, I saw price just pulling back, and then we started pushing to the upside. And I knew Euro USD was on a downtrend. Daily is down, 4H is down, this high is not broken. So why will I be looking for buying opportunities, right? So in my mind, I just want to see what price will do at this level. And applying the rules that I just showed you, I'm just going to have my zone right here, right? So this becomes my zone. So what I don't want to see is, I don't want to see this price pushing to the upside to break the previous high. Once we do that, then this is not going to be a head and shoulder pattern for me, or price is not going to reverse. Price is just going to continue, and I'll be looking for buying opportunities, because once price break above this level, what I'll be looking for is, I'll look at this as an inverse head and shoulder, left shoulder head. This will be my right shoulder, and what I'll be looking for is a pullback here, and I'll start looking for buying opportunities. But until then, I'm still looking for selling opportunities because we're on a downtrend, right? So looking at this price pulled back in this zone, and then we had a push back down, right? I didn't go for the risk entry because personally that is not part of my trading rules, right? So I established my neckline. So once we had a break of the neckline, I took this trade on the very lower time frame, like the 5 minutes. Once we had this break of the neckline, I got in with my stop loss here, and I targeted the previous lows, right? Or you can also measure from here to there, you bring it here, and then that's gonna be your target, right? So this is why I targeted, but I actually scaled in, which means I added other positions to it, right? And this was on the 5 minutes time frame. So right here, this is a downtrend. I went down the lower time frame to get a continuation to the downside, right? So right here, if I go on the 5 minutes time frame, you see this impulse, you see a nice correction. I just scaled in to the downside. So these were two trades that I took just on this single move, right? So this was very beautiful going down. And also, as I say, whenever you are trading, price is not gonna go, you know, in one way direction. If we are going down, it's not gonna go down forever. We're gonna hit a level where price will react and pull back. So always you need to look to the left to see what kind of level that the market is likely to hit before pulling back, right? So going back on the daily time frame, when price was dropping, like this was the drop that we just caught, this was the drop. So looking to my left, I established an area of value, right? And this was my area of value. When price got here, we had a nice push to the upside. We came to tap that same area, push to the upside as well. So that is the same zone that price is approaching. So I want to see, I don't know whether price is going to break this zone and continue to the downside, of which I'll be looking for selling opportunities. But as it stands, price is sitting at a support, and I'm not looking for selling opportunities at the support, right? So this becomes my area of value. So here I want to see if I'm gonna get like a head and shoulder pattern or a double bottom pattern or any kind of pattern that will, you know, push the market to the upside. Though if I should buy here, this is a counter trend trade because I'm trading against the overall direction. If you're a beginner, I don't advise you to do this, but this is something that I did. This is just a quick trading intraday trade that I took. So you're just gonna see the same approach that I used on the first entry, right on the second entry, right? So just look at this right here. I saw price. Let me just delete this zone. You already know that we are in the zone, right? This is a key level. You already know we are in this zone, right? So what I want to establish is I want to see, you know, a reversal pattern, right? And this is something that I shared in my Telegram group, but I didn't really explain the reason why I drew this box. So here is the explanation. It's the same. When I saw price approaching this key zone that we had, I just had to establish the first low, right? And price broke this low, right? So after price breaking this low, I don't know whether price is just gonna pull back and continue down, I don't know, right? But looking at this, I just drew my zone in that low. So I had my box sitting right here, right? So I saw price, you know, just pushing to the upside and coming back in the zone. And once we hit that zone, this was an engulfing candle, right? And as you can see, this is a head and shoulder pattern, right? This is what I was just explaining to you. We have different, you know, shapes of the head and shoulder. Sometimes price could just come exactly at the neckline and then pull back, and then this will be a perfect head and shoulder. Sometimes price will not even get to the neckline, it will just move halfway like that, and then price will also do such a thing, which means we will have a slanted neckline. And this is exactly what happened. So if I should delete everything and even draw the neckline, you will see that we will have a slanted neckline. And this is also head and shoulder. These things comes with experience. The more you trade, the more you get in the market, you'll be able to easily spot these kind of setups, right? But right after breaking this slanted neckline, I just got in. My first entry was just here, right? But you know, I couldn't update my my group on the Telegram, so I just sent a video saying that we can expect price to pull back. This was, you know, price was already up, you know, this was my first trade, so I finished with this trade taking profit. So I sent, you know, like a video in the group saying if price should pull back here and, you know, we get any confirmation, we can just get in for another entry to see the market going up. And that's exactly what happened, right? So I just followed this systematic rule just to catch this simple trade. This is not like a whole strategy on its own, but these are just rules I've established around my strategy, right? So you should also understand that it has to do with a lot of things. It has to do with market structure, it has to do with candlestick patterns, and because if I should draw a zone here, right, and right here I'm seeing this kind of head and shoulder on the time frame that I'm looking at, and I come on the daily time frame, I'm also seeing this engulfing candlestick right here. This gives me a solid reason, you know, to be looking for this kind of, you know, entries, even right here going forward next week or going forward next 2 weeks. So I can establish the same rules because price has pulled back all the way to these lows, and this is where we were expecting price to reverse. Those of you learning with me, you know, my premium members, you already understand the 90% rule, and price is in that zone, right? So here we could have, you know, a reversal. So if we should apply the same rule, we will have this left shoulder here, we will draw something like that, and we will see if in the future price will just pull back in this zone. If we get in this zone and we get like any kind of confirmation, we can take the risk entry, or we can also wait for this to happen, right? And if this happens, this will be a left shoulder, head, right shoulder, and we will see price just reversing all the way from here, you know, to the upside, right? So this will be the end of the bearish trend, and we will have, you know, an onset of a bullish trend, right? So this will be something like that, and we will see price just breaking these highs, you know, and probably retesting, and we will start looking for, you know, buying opportunities. But it's all about the rules that I have around these kind of setups, you know. So looking at this also, this is also like the same thing I applied here. I remember when price was here, we applied the same rule to it, you know. Price was just creating lower lows and lower highs on the daily. We shifted, and then we started creating higher highs and higher lows. So this was an uptrend, price created a higher high, this was a pullback phase, right? So I went down right here. How did we know that this pullback phase was about to end at this level for us to have a potential move to the upside? So let me go down, I'll show you exactly how we saw it. It's the same strategy that I applied, and it's the same thing that happened in the market. So let's just see what happened. Just look right here. We have the pullback phase, this is the correction phase, nice correction phase, right? And this is a flag pattern, can just break to the upside. So looking at this, we had this zone or this level where price came to, right? And we had this left shoulder, we have this head, we have this right shoulder, and drawing my box, I'm gonna have something like this, right? So just breaking this neckline, just by market breaking this line, this was a reason for me to enter just here, breaking the neckline. So it's not just about me waiting for price to break the trend line. This is another confluence, right? So I've entered the market not just because price has broken the trend line. One, price has broken the trend line, that is fine, because I always say trend line is just a guide, Trend line can be adjusted, trend line can be whatever, you know. It's just a guide. It's not like a very solid reason for you to enter into a market, but it becomes solid once you add them to certain confluences. So right here, I have the trend line broken, I have my neckline broken, I've identified head and shoulder pattern in an area of value. So I have like 3 or 4 confluences, and also I know that this is an impulse, this is a correction. On the daily time frame, you saw it. We have the impulse, we have the correction, and on the daily time frame, this is what I'm expecting. I'm expecting price to actually push to the upside. So me seeing this here in this zone and breaking to the upside, I have every reason to get into this trade. So it's all about the system that you have around your strategy. It gives you the confidence and also the ability to get into a trade without you being scared, because you already know what you are looking at. And if you get into the trade after seeing all your confluences and, you know, seeing all your system and everything playing out, and the trade doesn't go in your direction and it hits your stop loss, you are still okay, because at the end of the day, you saw what you saw, you followed your system, and it is what it is. The market sometimes, you know, does that, you know. So it's all about having a good solid system and a strategy that you follow. And these are things that I teach in my academy. So just by looking at this kind of structure, I can simply say that price has, you know, done this. We have this zone, price created left shoulder. This is not a confirmed head and shoulder yet until this is broken, right? This becomes our neckline, right? Even though if I should tilt it, because this is where the market came to tap on, right? This is the left shoulder. No, this is the right shoulder, and price pushed to the upside. So if I want, I can say, okay, this is the head and shoulder pattern, right? But to be safe, I can just wait for the original neckline or the actual high to be broken. So in the future, if this should happen on this pair, then we can see price just pushing to the upside. Until then, you can still, you know, be looking for selling opportunities, because price can also just come here and then continue pushing to the downside, right? So this is how easy and simple I read the market, just by following my systems. So before I end this video, this is gold, and as you can see, we have like a triple bottom right here. If I should go on the daily time frame, you'll see that we are sitting at an area of value. This is where we had a double bottom, right? So price rejected right here, pushed to the top, came back, rejected, and pushed all the way to the top. That is where we are right now. And even on the daily time frame, you can see how the candle closed for the day. This is a bullish engulfing, giving us indications that price is likely to push to the upside, right? So if you go on the 4H time frame, what I can also see is triple bottom. I have my rules around triple bottom as well. I have my rules around double bottom. I have my rules around flag patterns. I have my rules around everything that I trade, right? So I know exactly what I'm looking at, right? So as it stands, as you can see, we have price just breaking above this level. And if I should go down on the 4H, we have a nice impulse, and this is also a nice correction. On the 15 minutes time frame, what can we have, right? We have this nice impulse, we have a nice correction. So if price should break above this level, you can see price, you know, trading to the upside. So this is what I'm looking at for gold. But if it doesn't happen, then I'll just stay out and then look at something else. Right here, if you look at US 30, it's the same thing that I'm looking at. We have the left shoulder, we have the head, we have the right shoulder. You can see price just broke the neckline, and this is the slanted head and shoulder, right? So you can see price just broke the neckline like that. And if you should just zoom in, you will see that price will just be creating impulse correction structures, right? This is an impulse correction. Price will just create this and then like that, because if you understand this structure, you know that this is just gonna trade to the downside. Just after identifying the head and shoulder pattern, you know you're gonna have a run to the downside. So yours is just to go down on the lower time frame and be catching these kind of moves. So let me just even go on the 1H time frame and let's see, right? So right after the break of the neckline, you can see what is happening right here. I can see a lot of entries. There's an impulse, there's a correction, there's a flag pattern, impulse correction. You can get in here. It's a nice impulse correction. You can catch this move. It's a nice impulse. There's a whole correction. Catch this move. Impulse correction. Can catch this move to the downside, right? So this is just like a simple way of looking at the market, just by having a system that you have back tested and also mastered. This is the US oil trade that we took. This was a very simple trade. This is just an impulse correction. We just waited for the break and we caught this move to the downside, right? This was our first take profit. This was our second take profit, and I also shared this in my group. Guys, just a quick recap. With the head and shoulder, we can see one on an uptrend which could reverse the whole trend like that, or on a downtrend which could also reverse the whole trend to the downside. So this is a downtrend, we could just have a head and shoulder like that, which will reverse everything to the upside. You can also have a head and shoulder within a pullback phase, which could also continue the trend, right? So like that, we could have a head and shoulder somewhere here, which could also just continue the overall direction of the market. So this is the end of the video. I hope you got something valuable, and I also hope you learned something new. If you did, make sure you subscribe. It's free. Just click on the subscribe button, right? And also make sure that you like this video, because I'll be dropping a lot of these education content just to help you grow in your Forex trading journey. If you want to learn more, if you want to join the academy, the link will be down in the description. You can also message me on Instagram or on Telegram. Have a wonderful weekend, guys. God bless you. Peace.